G'day traders, thanks for joining me this evening. What I'm going to do for you is really address three shares which are set up really nicely in the way of trade setups leading into March 2014, or really rounding out March 2014, and definitely moving into April 2014. Those shares are this evening Caterpillar, HD, and also Starbucks. Now, when we address shares, we always keep a neutral perspective as to which direction they will move or could move. So what we like to do is set up what we call bidirectional trades, where we simply capture the breakout or the trade setup, either bullish or bearish, and really just let price confirm to us which direction the share wants to essentially move. So what we'll do this evening is we'll begin with Caterpillar. Now, Caterpillar is set up really nicely for either a pretty big breakdown or a continuation of the bullish trend. As you can see, what I'll change to a weekly just so you can see the price movement of Caterpillar since 2011. So going back to 2011 down here, you can see that we're stuck in some form of a channel, or at least a trading range sideways. So you can see the general oscillation, which hasn't really been moving as high or up to those old historic resistance levels, up about 114 recently, but is really on the impetus and really at that resistance level, which is offering the last sort of area of selling pressure until we move back up into the $100 area, or at least the $120 area. You can see roughly we're sitting here right in the middle of the channel. If you could essentially put like a 50% line in between these two outlines out here, we're right in the middle of it. So pretty much we're in no man's land at the moment. But what's most fascinating anyway about Caterpillar is the fact that we are typically trending. We are above the 10 and the 20, but the actual volatility in the structure, right, the resistance and the support, the intermediate ranges, are very tight. Now what this is doing for us is telling us the volatility is suppressed, which is great. So we can remain neutral and really set this up very neutrally leading into the future. What I mean by that is that we do have a few sort of convoluted signals in the way of which direction Caterpillar wants to break, or at least wants to move short term. However, I'm very confident in catching the move which is about to occur. So what I'll do for you anyway is just speak about Caterpillar, and really the best thing we can do is just move to our Bollinger Bands. You can see they're squeezing, which is really just a representation of what's happened throughout the months of February and March 2014. You can see I've got a bullish trigger set above resistance here at $98.89, and if that triggers, we'll be moving up to the old resistance levels at about $103 a share, if not about $104. If we break above this resistance level, right, then we simply start looking up here, which is our all-time highs at about $116 a share. So you can see, putting it into perspective, that we do have a lot of upside, and this is really going to bring the range back up to that 100% line when we establish those old all-time highs. Conversely anyway, and this is where it gets interesting, is the fact that this is eerily reminiscent. Now let me just zoom out so you can see what I'm talking about, of this period. Let me just zoom back in so you can see. Eerily reminiscent of this period over here in August 2011, when we got the massive downside breakout, and also throughout the area, or at least the topping pattern, which really set itself up in February 2012. This is very similar to price and how it's trading at the moment, and is also an alternative to the first sort of solution or hypothesis which I just spoke about. So really, what are the confronting signals at the moment is, if we change to our oscillating indicators, is the fact that the MACD is absolutely tanking, so is the RSI, and also is the stochastics. What this means is that they are giving us sell signals at this level. One thing which is sort of working against that is the fact that we are typically in a trend. So we are trending on Caterpillar. So really the safer entry on the bearish side is down here at $93.48 a share. 100% full disclosure, I've got initial entries to enter into put contracts at 94.77, and then I'll simply be adding to positions at 93.48 upon further confirmation. So I'm sort of jumping the gun a little bit. I know the 50 exponential is moving up through here, but it's a way to get your foot in the door anyway, in the event that a really big move occurs on Caterpillar. Now again, zooming in on the detail, today we had what we call a spinning top. It's really just indicative of indecision. You can see that the buyers and sellers are a little bit unsettled, and that's really been the nature. If you count all of the spinning tops we have, or at least the doji candlesticks, the shooting stars, I mean, really it's about a month, or around 20 candlesticks worth of just candles which give us no clear directional signals of what could happen on Caterpillar, other than the fact that we just simply have to wait. So in the event that we get triggered at 94.77 or 93.48, we've got targets down here at about $91 a share. Now, long-term perspective on Caterpillar, really simple. If we get triggered down here at 93.48, then we're really looking at lower lows. And what I mean by that is that Caterpillar could be sitting down here at $85 a share later in 2014. Is that possible? Yes, it is. It is completely plausible, and it's definitely something that could occur throughout the year. So this is definitely a longer term sort of trade. It is essentially what we call a trend reversal. So it will be an area where we stall, and then we start setting up what we call lower highs as we trend lower. So price will simply sell off, it'll bounce, it'll make a new lower high, it'll sell off, make a new lower low, then it'll fail again and just continue the process lower until we get down into some very important macro areas of support. And as you can see, it's really down here in May, October 2013. So that is the long-term sort of outlook on Caterpillar. Also, the long-term outlook on Caterpillar is definitely this price level up here about $115, $116 a share. So again, sitting very neutrally on Caterpillar. What I'll do now is speak about HD. Now HD, actually it's not HD. Let me just get this, or the correct share. It's actually XOM, which I wanted to speak about anyway. So please disregard the introduction where I alluded to analyzing HD. It's actually XOM and Starbucks. These are the two shares which we'll continue with anyway. So with XOM, we have a really nice bidirectional trade set up again at 97.53, trading up to 100. But also the downside sort of trigger is a lot more enticing at the moment. You can see we're set up here at 92.92, very close to triggering on Wednesday's trading session. If that does occur, we'll be moving down to 90.33 most likely. But then again, you have to look at these macro support levels, which really come in about $85 a share. So you can really start to see the risk reward on individual trades upon the break of certain key levels. And that key level at the moment is about $92.92. Exponentials are completely flat. We are getting a rejection at that 61.8 Fibonacci retracement level. You can see the 100 and 200. It is sort of in between price, but it's not enough to stop you from sort of entering into a bearish position. Stochastics, the RSI and the MACD are all sort of oversold, or they're at least bearish short term. These can correct, of course, but the longer term picture is definitely down on XOM until we take out 97.53. So we do have some quite considerable downside targets on XOM. And to really finish this special update, let's just have a quick talk about Starbucks. Starbucks, again, another really nice bidirectional trade setup. Very close to triggering today on Starbucks at 77.30. It isn't an order you should have set up in your trading account if you're trading down here at say $74 a share. It's not something that you'd have open. So what I'm going to do is just move it up above the wick of today's candlestick, because today's candlestick can really be interpreted both bullishly and bearishly. Sure, we did get an incredible amount of volume surge into Starbucks today, but most of that volume is actually attributed to that long upper wick. What that's telling us is that there's a lot of selling pressure around this $77 level, especially on all the way down to $75.91, where we actually closed today on Starbucks. So originally what we had set up over the weekend was a bearish trade setup, and this is what I was very excited about at 72.73, because we can simply see that we are technically still in a bearish downtrend, and we're just looking at a logical place to get into the next sell-off and the next wave down. And really that place is, as I just alluded to, $72.73. It's below that 200 simple moving average. It's also below all three. Pardon me, let me just undo that. It's also below all three of our oscillating indicators, below all three of our exponential moving averages. So we're just ticking the boxes. We're breaking support, we're breaking the exponentials, we're breaking the simple moving averages. Again, look at the crosses that will take place on our oscillators, which are fantastic during a sideways market movement. I mean, all of these things start to come together, and you can sort of plan these trades days and even weeks before they actually trigger. So this isn't, or it doesn't have as much of a downside potential, but definitely if we break 72.73, then we can definitely come down to $70.06. And then if we break that support level down here, this is where it gets interesting, 68.29. Then we're looking at some all-time or some major macro support levels. Let me just zoom out and show you the areas which I'm looking for. Really stem back to 2012. This old resistance level here at $61.90 is now going to be a fantastic target over here if in fact in 2014 we decide to sell off and move bearish. So a lot of these shares, I mean, you can make the argument both bullishly and bearishly, which is great. But again, we just simply wait for price to confirm our original analysis. It's the best way to trade the stock market, the most profitable way to trade the stock market as a technical trader. All the best, everyone. Thanks a lot for watching this video. Give it a thumbs up if you enjoy it, or at least post a comment down below. Any questions or queries, I will reply immediately or as soon as I can, and I'll do my best to obviously address your concerns and any questions you have on the actual analysis relating to Starbucks, XOM, and also Caterpillar. So all the best, everyone. Thanks a lot for watching, and have a great rest of the week, and enjoy your profitable trading. Goodbye.